Okay, let's get going. Morning, guys. Just give me a thumbs up, an emoji thumbs up if you can hear me okay. Bobby. Nice work, Bobby. I'll get up and racing. G'day, Lauren. Coming through clear? I assume we are. No worries. All right. Welcome, guys. Welcome to Trade Setup. Overnight recap, overnight review of what happened last night. Okay, for today, I guess there's no getting around it. The market's probably going to get pummeled on the open. Especially after a day like yesterday, the market, and it's kind of a really weak sign when you've got me kicking out my cord. There you go. If you've got a really weak sign like the market's pushing down, opens weak, tries to sort of rally a bit, and then sells off lower into the close, finishes off lower of the day, finishes at its lower of the day for the session anyway yesterday. So backing that up with potentially another 120 point drop on the open is what we're looking at from where the futures finished. The ASX finished at 4 o'clock. It's going to be. I think what's really done it is spike into fear at the moment, because it was another big day, 2 days in a row in the US. Which recently it's had it's had a big day and it's bounced back, and you can see the actions being different the following session. But yesterday it wasn't, and we got smacked around. Going to get smacked around again today. So the thing is now, it seems like the market's looking at US just put another 7.5 billion or 75 billion tariffs in Europe on the EU. So now they've done that. It's sort of everyone's relating it back to what's happening with US and China, and that's going to tick off a tit for tat tariff, war, trade war. So that you'd probably be viewing that as a start of things to come. And I think the flow-on effect into the US economy, once you're starting to see potentially employment last night was a bit weaker than expected, or new employment, new job numbers, weaker than expected, meaning potentially they can read into that what's going to come out on Friday night, which is the US payrolls, potentially going to be weaker than expected, showing a bit of a drag on new job growth, which they don't want. And that's going to flow on into pretty much everything, consumer spending. If you've got prices, because the people who are paying for tariffs are the US citizens. It's not Europe, it's not China. It's the US citizens are paying. And they're potentially, if that starts to keep crimping or costs there, I guess, and manufacturing is going to manufacture less, so that's going to keep hurting that if tariffs don't get taken off or it doesn't get sorted out. So when they add to it with Europe, it just seems like the picture's getting a bit too much for people to take. And you saw that last night with a big sell-off. So what they're starting to look at is obviously, okay, the US has been buoyant, considering everything considered, with jobs, consumer spending, and things like that. But sooner or later, you can't deny the fact that it's going to flow on into those areas, and that's going to eventually create a bit of a big issue. And I think maybe not. We're starting to see the start of that now. We're starting to see the beginnings of that. Okay, let's just quickly go through the markets. We'll see where the SPY's open just while it's just open now. Just want to see what. Okay, so you see that the SPY's just driven down. So I think yesterday I had a short in here somewhere. It didn't, or earlier. No, actually, I had a short earlier. I'll show you. Actually, I'll go to the 5 minute now, just to go over some trades from yesterday. Actually, would have marked up. Let me just I could probably get the chart up if you want to just bear with me 1 second, just to show you some opportunities from on the SPY yesterday. Now, 2nd to the 10th. So this is just what I marked up after hours. There could have been an opportunity on the open, but it was a bit tough, I think, considering that the market, has been sold off quite hard. It's gapped up on the open. It's probably cleaned out a few of those sellers just on, into the close of US session. Then it's headed straight south. So I found that probably would have been a tad difficult, even though it was an opportunity. I prefer to see the market open at 10 past 10, fully open. It did sell off. I think I had you can see this pullback, and that's basically broken through that level at 66.34. Great. I was looking to short it in here, just didn't get onto it. Actually, this round candle here off the minor lower high. So we've spoken about that quite a few times. Did press down, didn't give me much. Reverse back up. So that was essentially a double top, retesting that, from underneath that support that's become resistance, 66.34. Had a sell in here again, just didn't go too far. Made a few points, but nothing outrageous. And I was looking for, because if it doesn't continue on through the low, what you could look for is a deeper correction, especially after the sell-off we've had overnight in the market and the sell-off again on the open of our market, which it did. It sort of grinded higher, but then once it starts grinding higher and you get this kind of price action, really the prime entry was later on the day, short on the short side, and that was 10 to 15 points. And you can see, and that's a minor lower high, if anyone can see that, just what I'm talking about. But that was the opportunities from yesterday. There was a few. It's just the hardest thing is trying not to be biased in any one direction. And that's, look, it's everyone's problem. Once you see that sort of sell-off, one of my biggest problems is tending to be biased up, looking for, okay, we're going to get a squeeze. And it has been the play the few days prior. You get this sell-off and then it bounces back again. So it has been a reasonable play to get biased long, but I think yesterday just smelt a bit different. It seemed a bit different. It felt a bit different. So that action, if you're looking at it in here, once it's grinding back up, you've got to take note when you've had that kind of sell-off and the market is grindy, as in it's grinding up, don't see that as strength. See that as potential weakness to come. And I actually did miss that trade later in the day. I was doing some other stuff. But that was probably the prime opportunity to take that into the close. And that was, you really, if you're a bull, you don't want to see, sell off into the close and then look at this continuation. The Europe's open, like we said yesterday. Europe was going to open weaker because it's just playing catch up to what happened in the US after hours. Once Europe was closed, it opened weaker. That's caused a bit of a sell-off. And then obviously tariffs been hit. They've just kept going down. So the market's got crucified once the US opened. Well, numbers come out at 10:30. I think it was 10:30, 10:15, 10:15. Yep, it was 10:15. So markets, that's when the US data come out showing job growth or lack of, failure to meet expectations. Market's gone boom, and it hasn't taken that very kindly at all. So really, what we want to see is to see if this is the low, overnight low, 64.71. Market's pressed down. It's bouncing off that at the moment. But we just wanted to see whether it can take out and clean out. It may need to clean out a few highs just to put some of these sellers back on the sidelines. But what it's actually done is reverse. So anyone that's bought it up off this low, and potentially that's enough to clear out a few of these late sellers, this little rally into the close. And that's probably why you've got any of these buyers now being squeezed out with this move lower on the open. They've probably just taken off, okay, we're going to jump, bail. If you haven't closed out some of this move here, if you were short, to the start of that move, or potentially those shorts for earlier on the move down, being squeezed out, the market's probably resetting itself. So it'll be interesting to see if it can sort of grind up like it did yesterday and then sell off into the close, or we just get that complete fear overtaking everyone and the market just to crash on the open. Again, we have to wait and see because, excuse me, what we said, retail opens, professionals close, and if they were closing it weaker yesterday, not the world's best sign. Let's just have a look at, so overall market, this is the Aussie. Aussie played out as we expected. It sold off. We're expecting that sort of grind back up and around 4 o'clock to get that selling pressure coming in again, which was just after 4, late afternoon. There was a good selling opportunity off a lower high. This is a 30-minute chart. Nice little selling opportunity with really the expectation, even if we build a lower high, you got 20 to 30 pips. I think it was a 40 pip move, potentially with only less than 10 pips risk, so 4 to 1 essentially. Worked out okay. It worked out quite nice, except we did get the US dollar once that started to sell off again, and it was lifting in the European session and sold off later. All markets around 6:30. If you go and look at the charts on any of the currencies, in the Aussie, bang, up we go. And it was the same sort of thing. The US dollar moves down, boom, up we go again. And that probably was a bit of a preemptive move, thinking, okay, the US is going to bounce as it does usually. And it was starting to pick up, but then sellers come in, bang, and hit it straight back down again. So that's the Aussie at the moment. Potentially, that's not what I want. Potentially it could be holding. We'll have to see if it can attack this level on the Aussie and create some sort of, if it attacks that level, then we could wash it out. It may be a major double top and we find, then I'd be looking for any selling opportunity, a shoulder to trade from. I don't, if it's from here, again, you just want some sort of shoulder like we got in here to trade short on and see if it can push down. But that's going to depend on US dollar weakness again. Let's just look at the euro. Euro bounced back a bit. It's starting to hold. There has been a good sell-off on the euro as of late. You see the market's been pressing down, holding lower highs. The strength has well and truly been on the sell side. And it was only just recently with that weakness in the dollar it started to bounce, and this was a good sign. It held a high low and started to press up. So this is the anchor for the downtrend. Remember, we talk about the anchors quite a bit. It hasn't clearly broken it just yet. You wouldn't say it's broken it, but that's where the majority of people can have their stops above that for the downtrend. And if they didn't move them down, so once, I mean, realistically, the way I'm always spruiking to follow it is if it moves down, takes out the low, you move your anchor to above the most recent lower high. If you're sort of trend trading, and that applies to most timeframes I would trade, pretty much all timeframes, you may take some off into a, if you're looking to ease out of a position, spikes low, you might take some off into a spike because you know there's probably going to be a retracement. And then, but your major position, your core position, you're following on the way down, using those anchors. So when it sort of pops through the anchor, it's going to clean out. I was going to put pressure on those shorts that are potentially going to exit. What you could do if you see this high low start to build, you might just want to lower it because generally that, especially after you got this move down, it's popped up a pullback. It's a decent pullback and a decent rally up off the lows and create that higher low. There's probably going to be another, and you're always looking for. Let me just get it up. You're always looking for this kind of thing, sort of that double move, which takes you straight through. So if you're looking at it that way, you go, okay, that's going to attack the anchor or break the anchor, which it did. It's pretty much played out to a T. So from here, I think to re-establish shorts, you want that to come back down below and hold a lower high below that anchor because it's not. It doesn't look like it's a clear break of that zone, and it's getting extended up here too. The momentum on the upside is easing, so there's a few things to watch out. If the US dollar does bounce, you expect that euro to come off again. So pound's pretty much the same. Pound is more holding, with a resistance zone around that 123.35, say. It hasn't broken out of its downtrend. They still got Brexit issues still playing out. So that may cap it even with a US dollar fall. It may be capping from buyers. Buyers might be capped sort of at that zone. We'll see how that plays out. US dollar, yen, US yen, yeah, fell over. That's the wrong one, isn't it? Fell over, boom, straight down. So we're looking to go from an offer zone to a bid zone, which is pretty much there now. It might spike through from, today, just on once Asia really starts to kick off, spike down to that zone, and we'll see if it can sort of get some sort of pullback. But that's it. You can see, I mean, not much to say about the Dow. You can see it's just what we discussed yesterday. It's extended that move down, followed on by this move. So you've got, some potential. So what you're really doing now, two things. If you shouldn't be getting long. You don't get long when the market's falling. I'm a big believer in that. You want to buy when it's rising. The ASX is going to be pumped on the open. It's going to start its opening now. So you want to be looking for now bid zones where you can potentially find a bid zone in the market. And you want to see evidence that buyers are starting to step in. That's going to mean one of two things. The start of maybe a pop back up and squeeze out some of those sellers that are built up, and you get the bargain hunters jump in, and then you could potentially jump into a quality stock, or you can use your currencies or indices, whatever you trade. Look for that pop and just manage it as it goes, and manage it to see if it continues on. Maybe it rallies up hard, you jump in, you got your setup, jumps in, pulls back, builds a higher low, and goes again, or is it going to rally up and then build a minor lower high and continue to drop even lower? And that's where you just take your risk off the table. But you want to be searching at the moment, I think, for some sort of bid zone that's going to hold and it's going to build. Could be here. I mean, I'm just lining that one up at the moment. Doesn't mean it's going to be because it hasn't. It's just reacted there. So you get that sort of reaction. But after a couple of big days of selling, you probably would have expected it to react off that zone because any intraday shorts that are building up, they might have built up in here on the way down. Those shorts are going to be looking, because they're not looking to hold it longer term. They're probably going to be looking for at least take something off the table, and then you get this sort of reaction back up, more from your short-term intraday or a couple of day holders than people expecting a massive sell-off. The thing is with this kind of action, this is your key high. We've got a key low in here. It's really just oscillating between the two if you're looking at longer term price structure. So it could easily, what we could easily do is build a bid zone here, go chop, 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 and then up we go. By chop, 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 I mean this sort of action. Consolidate, start to hold higher levels, and then boom, up we go. Something like that. Just say, if that's going to be your longer term bullish action, and that's enough of a clean out because we couldn't get through this high as we started holding lower levels, lower high, pressing down. Okay, we've cleaned out some of the buyers from this move, and then it has to reset. So if it's going to reset, you want to see it spend some time, but down here, not pop back up. I don't want to see it pop back up. If it pops back up, I'm more inclined to see the reverse of that, or expect the reverse of that. You get that sharp sort of reaction. There's no real seller standing away, but then they pile back in later on and they pressure the buyers. So that I would expect to boom down on the downside. Right, so that's the Dow. S&P is going to be much the same. But the thing is, look at the DAX, and they've copped it last night down around, I think, over 3% for, it was down over 3% on the FTSE and down just under 3% on the DAX. Now, obviously, with those tariffs, people are just going, all right, that's it, I'm out of here. And you can see, you just go to the hourly chart. That's not looking too crash hot. You've got a key high up here. Market couldn't reach that key high. And that's after you breaking your anchor. So we've got a couple of levels. We've got a major level down here that's retested. But if you're looking at it, that was your anchor level. Whoops, just make that a bit better. So this is your anchor level. You can see the waves going up, pull back, correction, back up, secondary wave, pull back, retested it, failed and broke through that key swing high, or at the stage it was swing low, sorry. Broke through that, which I consider the anchor to this longer term move up. All right, which has been a good part of the year. That move up there, and you can see the waves up, down, up, down, up, down, up, down. Okay, just took out the anchor, so it's never a good sign when you take out the anchor of a move up, like we did this major push down to a lower level, and retrace and fail to get back up there again, because it's not really retested highs, it's a lower high. So that really is starting to get confirmed, or well and truly confirmed. So to me, that could mean that longer term, if we just look at, it's not going to be too much, but we could really start attacking this low here, 11,279. It's another 800 points from here. And we could even go straight through that. This could be the start of something. I'm not saying anything negative with the bear suit on there, Lauren, but it's not looking too crash hot at all. So they got hammered. And if you're going to get the tick for tat, I'm saying the wrong thing there, tick for tat, trade war or tariffs, then probably is going to concern. They're already under the pump with growth in the EU. That's going to just crimp things, manufacturing even further and growth even further. It's just to see if the EU are going to talk about interest rate cuts again, or some sort of QE or support. They might find some support in there. They might find some buyers, but I think there's going to come a time when buyers are going to give up on that and just start to book profits and let it play out. Especially if the story starts getting bigger about negativity and market recession and all that sort of stuff. So gold did bounce as we expected. I think anyone that's jumped on TradingView with us, following us on TradingView, so we posted it about here. Actually, it was a bit of a stuffed up the post, to be honest. I had this picture up, but when you look at it, when you look at the post, you get this picture with everything. It's hard to see what I was saying on gold, but either way, we're just looking at that's one, pullback, two. We're looking for that secondary move higher, like we're sort of describing in here. And it did play out. Might have been a bit tougher to enter, but you could have entered after a shorter time frame. This is the hour. You've probably got a half an hour chart that built a higher low, got in long, knowing that the markets were caving in around us. It's just now we're going to see how this goes with this pullback, retest this 1500 and go again. If the market gets on the downside, gets a bit of a run along, then expect higher prices on gold, especially when safe havens start to dive in again and US dollars falling. That's about it. Let's just see what the SPY's doing again. Okay, it's retesting these lows, not looking too crash hot. Where's the index? Index down 120, another 60 points takes us somewhere around 65. These lows in here, is that right? 66.50, about 100, 60, say 65.20 thereabouts. So another 50 points from here. Also, if the SPY continues to tick down, it's meaning that there's going to be more negativity on the open. You can just see it dropping down 84 at the moment. Be a bit more negativity on the open, which is not a really crash hot sign. So that's the overall structure. You've got a big leg up, good sell off, another leg up, building a lower high. It's not confirmed until we get through 64. So I guess don't go running around saying that the world's falling in, caving in, because this could easily bounce. We could start to buoy, hold a high low. Like people were expecting to sell off. Even I was around here, maybe a bigger one. The price action didn't play out that way. It started to hold. So you've got to change your perspective. The same thing happens here, and you think there's going to be a massive sell-off. You get ready to change your perspective if it starts to hold up. Okay. At the moment, we're all seen as the last couple of days have been some savage sell-off. Generally, that could lead to something else. Especially the biggest problem we've got now is that we've got highs. We ticked off into those highs, which we mentioned. Okay, that was going to probably trade into the highs. We were talking that up for quite a while. Went through the highs and straight back down again. So that's a big wash out of the highs. And if we're going to get a lower high building, around here and put pressure on that weekly, we could have a few little issues. We'd have, somewhere we could really get a good sort of corrective action. But that, could just play into see where it is. So if we just draw this up, actually, I'll take a snapshot of this. Okay, let's try that again. So this is the monthly. I mean, all things, well, that's not what I wanted. Excuse me. So that's the trend. You're getting a bit ahead of yourself. We've got up to the highs. Yeah, that's longer term bullish. Excuse me. But shorter term, it's looking bearish to me. It's just backing away from the highs. Sorry, I just have a bit of a drink there. So you can see, when you do get a bit extended, and this is the chart we've been looking at longer term, you see it's rolling over here. Momentum hasn't quite slowed. It's just not out of hand on the upside. So there's sort of these things that momentum started to shift potentially to the downside. Could be just a contraction. That's the monthly. Maybe back to the MAs, which would suggest somewhere around 62.50 or thereabouts, which would mean 250 points from here. Yeah, okay, that's not very nice, but it's not the end of the world. And then start to bounce off those MAs. We could just do that like we've done here. Previously you do it quite a bit. Could be something like that. Look at this move up, quite strong. Back to the MAs. We're going up, maybe back to the MAs. I don't know just yet. There's no clear sign. So if you go down to the weekly, just flick it to the weekly. We've got to clear for any real negativity, clearing 64. And that's where you might be playing in the hands of that monthly pullback. But if not, we just chop around here, start to build, and then really spend some time consolidating around these highs for a push up. And we may do that. I mean, we just have to sit and wait and see. So down 129, it's not looking too flash on the SPY. I mean, for today, nothing's set up just yet. We'll just have to wait and see what's going to play out. If this doesn't hold, we can't press up through those highs, then it's really been biased down. So it's hard to, one thing if you're intraday trading, when you've got moves like this, down 120, the market's generally going to be negative all day. It's really, and especially after one day, it's already down 100 the previous session. It's hard to even think about anything but shorts. And down here, I'm not willing to short it down here because I just want to see some sort of flush higher, flush a few of these, shorts that build up through here, flush them out, and then reset and potentially get that move down because that's where you're going to get a secondary wave. Could be quite strong. Any sort of move down here is spot, you can get whipped back out on a little pop back up again because the market's already down. It's already done a lot of damage on the open. So we'll just wait and see how we go. that'll probably do us for now, guys. Any questions, feel free to send us an email to support@tradesetup.com.au. And good luck with today. We'll see what happens, see what plays out. It's down 136, so it's getting a bit worse at the moment. So just yeah, stay safe. I'll be more inclined just to go for a walk today than anything else. If you're not intraday trading, you're not, shorting some stocks even, or I wouldn't be looking to buy just yet. I'd rather let the dust settle, especially if you're looking at longer term. Yeah, not much to do today. So, guys, enjoy your day. We'll speak again tomorrow. We'll see what happens. Cheers, guys. Bye.